I'm going to uli.org to find the market trends, and we just had a really good update on the market yesterday that was pretty positive, very positive on the multifamily side. Retail is okay. It's going to be okay. Industrial is going to have a challenge because it's overbuilt, and office has been soft for decades. So we really had a good market update in terms of unemployment, and also in NAIOP has good training. CBRE has some good trending. So what I've done is I've been staying away from those syndication seminars that are telling people to buy anything, no matter what. And going with more of the industry standard professional organizations where I know that, like, I have all the knowledge, but I've put my guys through the ULI, the Urban Land Institute training, because they have good foundations of commercial real estate that a lot of these syndicators are not teaching. So I think that's the biggest problem is knowledge base. There's a skill set gap over the last 3 to 5 years, and it's causing a lot of uncertainty and havoc in the market. On the flip side, what it's doing for our deal is the lenders are seeing our ultra conservative underwriting, and it's shining so brightly. So even with interest rates rising and banks closing and that uncertainty, investors have pushed the pause button in some cases. Our investors, because our deal is conservatively underwritten and profitable from their standpoint, they are actually coming back in to strengthen their positions and increase their positions. So there's both sides. There's a lot of stuff going on, a lot of volatility, but it makes our deal or any of your off-market deals, it makes them shine because they're much, much better.
Yeah, and in market volatility, there's a flight to quality. Some may pull back and panic and just kind of hold off, and then others they want quality. Your blue chips, if you will, Class A, as far as real estate's concerned.